Did you know that in 2024, the U.S. tax code will undergo significant changes affecting millions? Today, we will discuss the details of these changes, providing you with the key insights with examples you need to stay informed. Federal tax brackets. In 2024, the income thresholds for each federal tax bracket have been adjusted. For example, single filers will find that the income limit for the 22% tax bracket has increased to $95,375 from $91,900 in 2023. This means a single taxpayer earning $95,000 in 2024 will be taxed at a lower rate for a larger portion of their income compared to 2023, potentially reducing their tax burden. And for married couples filing jointly, the 22% tax bracket now extends up to $190,750 compared to $184,800 in 2023. This means a married couple earning $190,000 in 2024 will be taxed at a lower rate for more of their income than last year. The table shows the tax brackets and corresponding income ranges for various filing statuses in the United States for the year 2024. The brackets are 10% for income up to $11,600 for single filers and up to $23,220 for married filing jointly, 12% for income over the 10% bracket up to $47,150 for single filers and up to $94,300 for married filing jointly, so on and so forth. Standard deduction changes. In 2024, the standard deduction for various filing statuses has seen an increase. For example, single filers and married couples filing separately will now have a standard deduction of $13,850, up from $12,950 in 2023. For married couples filing jointly, the new standard deduction is $27,700, an increase from the previous year's $25,900. These increases in standard deductions can benefit taxpayers by lowering their taxable income, which in turn reduces their overall tax burden. This is particularly advantageous for those who do not itemize deductions, as it simplifies their tax filing and potentially increases their tax savings. The image details the standard deductions for various filing statuses in 2023 and the increases for 2024. For single filers, the standard deduction will rise from $13,850 in 2023 to $14,600 in 2024. Married couples filing jointly will see an increase from $27,700 to $29,200. For those married filing separately, the deduction remains the same as for singles, increasing to $14,600. Heads of households will have their standard deduction increased from $20,800 to $21,900. Here's a look at how some other common tax rules will change in 2024. Gift tax. Exclusion. In 2024, the gift tax exclusion in the United States will increase from $16,000 to $17,000 per recipient. This change allows individuals to give more money to others without incurring any gift tax. The significance of this adjustment is particularly notable for those who regularly give monetary gifts to family members or friends, as it offers an opportunity to increase their generosity while staying within the tax-free limit. This higher exclusion limit is a part of the annual adjustments made by the IRS to account for inflation, ensuring that taxpayers can continue to make substantial gifts without the burden of additional taxes. HSAs and FSAs. In 2024, contribution limits for health savings accounts, HSAs, and flexible spending accounts, FSAs, will see significant increases. For HSAs, individual limits rise to $4,150, while family contribution limits are now $8,300. FSAs will have a new limit of $3,200. These changes enable individuals and families to set aside more pre-tax income for healthcare expenses, enhancing their ability to manage health costs effectively while benefiting from tax advantages. These adjustments are part of the IRS's annual updates to align with cost of living changes. Earned income tax credit. In 2024, the credit will increase to a maximum of $7,830 for qualifying taxpayers with 3 or more children. This enhancement in the EITC is a significant boost for low to moderate income families, offering additional financial support. Here's a look at the changes in real estate taxes in 2024. Mortgage interest deduction limits. In 2024, potential amendments to the mortgage interest deduction limits could affect many homeowners. For example, the limit for deducting mortgage interest might be reduced from interest on up to $1 million of debt to interest on up to $750,000 of debt. This means if someone has a mortgage of $800,000 and pays $30,000 in interest annually, previously they could deduct the entire amount. Under the new limit, they can only deduct interest on $750,000 of their mortgage, slightly reducing their deductible amount. Such changes can influence financial planning and decisions regarding home purchases or refinancing. Capital gains tax changes. Long-term capital gains tax rate continues between 0 to 20% depending on your federal tax brackets. The table shows the long-term capital gains tax rates and brackets for the year 2024. There are 3 tax brackets for long-term capital gains. 0% rate applies to unmarried individuals with a taxable income of $0, married individuals filing jointly with $0, and heads of households with $0. 15% rate starts at $47,025 for unmarried individuals, $94,050 for married filing jointly, and $63,000 for heads of households. 20% rate begins at $518,900 for unmarried individuals, $583,750 for married filing jointly, and $551,350 for heads of households. Rental property tax rules. According to the IRS publication 527, commercial real estate depreciates over a period of 39 years, while residential property, including apartments and multi-family buildings, depreciate over 27.5 years. After that time, the property is considered completely worn out, at least for tax purposes. The rates continue to be what they were in 2023. Bonus depreciation. Bonus depreciation will continue to ramp down for ensuing years, 60% for 2024, 40% for 2025, 20% for 2026, and 0% beginning in 2027. Bonus depreciation is a tax incentive designed to stimulate business investment by allowing companies to accelerate the depreciation of qualifying assets, such as equipment, rather than write them off over the useful life of the asset. This strategy can reduce a company's income tax, which in turn reduces its tax liability. Estate tax thresholds. In 2024, changes in estate tax thresholds could affect property inheritance. For instance, the exemption amount might be raised from $12.92 million to $13.61 million. This increased exemption amount means that individuals can transfer up to $13.61 million tax-free during their lives or at death, and married couples can transfer up to $27.22 million. If you found this information helpful, please show your support by liking, subscribing, and sharing this video. Your engagement helps us reach and assist more people. Don't forget to drop your thoughts and questions in the comments below. We love hearing from you. Stay tuned for more insightful content, and remember, staying informed is key to navigating these tax changes successfully. Until next time.